I created the momentum wheel strategy, and it's been a game changer for my income. This innovative approach combines momentum trading with the traditional wheel strategy, and it helped me make over $10,000 a month consistently while using just a small fraction of my portfolio. In this video, I will break down how it works and how you can start using it to boost your own trading profits. This is a strategy that I made up, and I've added my process of momentum to the wheel to squeeze out an extra return by using the momentum wheel strategy on high quality companies to make extra monthly passive income. This momentum wheel strategy is my innovative trading approach that combines momentum trading with the traditional wheel strategy, which includes basically selling puts to get in and then covered calls to get out. You see, the wheel strategy is just a process. It's just a system where you sell puts to get into a stock for a better price than the current market price. And then once you do get assigned, which eventually you will, it shouldn't be a problem, you then start selling covered calls to generate income. The main purpose of the strategy is to generate a consistent income stream while minimizing risk exposure. By focusing on stocks with strong upward momentum, traders can maximize profits and potentially acquire shares at an attractive price, creating a systemic method for wealth building. Momentum trading involves identifying stocks that are trending upwards, typically driven by positive news, earnings reports, or overall market sentiment. The idea is to ride the trend to maximize returns. The traditional wheel strategy consists of 3 different steps. Step number 1 is selling a cash secured puts. Traders sell put options on stocks they're willing to own. If the stock price falls below the strike price, they're assigned the shares at the lower strike price, effectively buying the stock for a discount. Now, number 2 is acquiring shares. Once assigned, the trader owns the stock, which is often selected for its strong momentum. Number 3, then once you do acquire stock, once you're in a stock and you have 100 shares, you go ahead and start selling covered calls. The trader then sells covered calls on the acquired shares, generating additional income while retaining ownership of the stock. The combination of these strategies allows for a systemic approach to trading where the trader can capitalize on price movements and receive income through options premiums. One of the primary goals of the momentum wheel strategy is safety. Yes, I put momentum in the name of the wheel strategy because I'm looking for high momentum stocks that are likely to make money, but you guys know me, I like safety. By selecting stocks with positive momentum, traders reduce the risk of holding declining stocks. The aim is to identify fundamentally strong companies that are likely to appreciate in value. Just putting 2 and 2 together. I'm picking high quality companies with good momentum. I'll show you what good momentum looks like. And then I'm running the wheel strategy and I'm combining these 2 factors to squeeze out an extra return. So the main goal is income generation is another key focus for me that I want to continue to increase in my portfolio month after month. And through the sale of puts and covered calls, traders can earn consistent premiums which contribute to their overall profitability. This creates a balanced approach where traders can enjoy income without the need for constant buying and selling. Get into the position by selling puts, you wait until expiration. If you get assigned, then you can worry about it then. The strategy is designed for those who want to achieve financial goals without taking on excessive risk, without having to, spend too much time. If you're a busy professional, like a lot of my busy medical professionals and engineers, and it also makes it very suitable for both new and experienced traders looking for a reliable source of income. So, when I'm working with a busy dentist or a busy nurse, I want to put them in a situation where they have very minimal management and very minimal effort to get a good return. So to be clear, the best way to run the momentum wheel strategy is to look for high quality companies. And then I'm going to point it out, guys. I'm going to call it out. Mag 7 stocks. Okay. The Magnificent 7. It's going to be Apple. It's going to be Google. It's going to be a few more that I mentioned later in this video. I'm paying close attention also to the Bollinger Band, technical analysis, and picking my optimal entry strike price. Okay. The price that you get in is one of the most important things that you can do for a stock because there's many good quality companies, but optimal entry, very important. Optimal exit is also important. So looking at the wheel strategy and using the momentum wheel strategy, you are going to get an advantage for both entry and for exit into each play, okay, as I will cover soon. All of this I cover in Discord, by the way, and in my bootcamp, I go into great detail. So I'm giving you an overview, and I'm trying to be efficient here on YouTube, but I go into great detail. So if you're interested in that, you can click the first link in the description and learn more about it. Of course, the strategy is better for portfolios that have 5 figures, or ideally multiple 5 figures, 6 figures, or 7 figures. The more money you have, the easier the strategy will be to run. So I do like to work with folks that have $50,000 plus to work with, because it makes my job a lot easier. Now, let's discuss the managing of the momentum wheel strategy. How do you get in? How do you get out? How would you select the strike prices? Okay, let's do all of that. And I'm going to show you some live examples as usual using my portfolio, because, I like to be very transparent with what's going on. But first, I do want to say that you need to establish a specific condition for entering and exiting a trade. You want to pick different levels, price levels, technical indicators, and you want to be aware of changes in momentum. So let's go into my portfolio. Let's go through some examples of technical analysis. Keep in mind, my portfolio is at 3.5 million. I'm halfway to 4 million, and I just crossed 3 million. It's been fantastic. We've been making money. We've been making a lot. So I'm going to pick a stock. I'm going to show you the technical analysis. All right. So you know what? I might pick Tesla right now, or Google. Google is also really good. Palantir. Yeah, let's go for Tesla. All right. So I'm going to show you some technical analysis on Tesla. I think this is a really interesting company right now. These are all my favorite. This is a Mag 7 stock. Okay. All right. This stock basically, oh, it's so funny. I got an ad for Mag 7. What? That's so crazy. I just mentioned that. So they got the AI. They're listening to me. No, seriously, like I've never gotten like an ad like this before. I said Mag 7 and like literally the ad came out. It was crazy. So look, Tesla, right? It's in the Magnificent 7. Now you know. Here's Apple, Amazon, Nvidia, Tesla, Google, Meta, and Microsoft. That's the Mag 7. How interesting is that? So look at the technical analysis. Currently, Tesla is somewhere in the middle of its Bollinger Band. I'm paying very close attention to Bollinger Band, guys. Listen, this is the indicator I came up with. I didn't come up with it. Let me correct myself. This is the indicator that I've been using longer than anyone else. I've been using this since 7 years ago. 7 years ago, I learned about the Bollinger Band, right? I was in college studying finance. To be honest, I did not see the Bollinger Band used at Goldman Sachs. So I did not learn this at Goldman Sachs, but I took it to myself because I have a degree in data analytics, business analytics. And look, let me explain to you Bollinger Band real quick, and then we'll move on to different technical indicators. The Bollinger Band essentially tells you where a stock is likely to trade within, right? It's a range, all right? So check it out. If you're a 5'10" man, your son is going to be about 5'10", because that would be the average, right? Your genetics is how the Bollinger Band works. It's not just stocks, guys. The Bollinger Band is just it's just a basic statistics. It's based on the bell curve, a normal distribution, okay? It's like normal distributions. Let me explain the normal distribution for you, all right? Listen, if you're a 5'10" man, your son's going to be about 5'10", because that is what would be normal distribution, okay? Now, there is something called standard deviations, okay? So when you go to the Bollinger Band, you'll see that's 20 and 2. What does this mean? Well, first of all, the period is 20 days. That's anyone can understand that. Standard deviation is 2. So what is standard deviation? Look, this is what standard deviation is. If you're a man, 5'10" is the average. One standard deviation would be 3 inches taller. You would be 6'1", all right? 2 standard deviations would be 6'4", which would be really weird. I mean, it's possible, right? But it's out of the ordinary. If you're 5'10", your son's 6'4", it's a bit out of the ordinary, right? Or if you're a woman, you're 5'5", your daughter's gonna be about 5'5", right? Let's go back to the men. That's on the top end. On the bottom end, you'd be 3 inches shorter than 5'10". So one standard deviation to the left of the bell curve be 5'7", and one more standard deviation, you would be 5'4". All right, so if you're 5'10", your son's 5'4", he's fully grown, he's whatever, 20 years old or whatever, that would be unusual, right? The same thing here. This is what the Bollinger Band is trying to say. It's trying to say basically that Tesla is likely to stay between 267 and 220. For it to be above 267, it would be as unusual as your son, who is 6'4", if you're 5'10". All right. Now, I'm giving you a height example. It's also an income example. So if you, it wouldn't be the same as height, right? Because income is not, it is genetic, by the way. Making income is genetic, but it's not like directly proportional to, like, if you make 70 income, your son's going to make 70 income. Let's say that, for example, you live in Pennsylvania, right? Where I'm from. You go to University of Pennsylvania, and the average income for an MBA is $160,000 upon graduation from MBA school. Okay. If your income out of MBA school is $240,000 and the average is $160,000, that would be one standard deviation example. That would be like, it's a little out of the ordinary. If you are making $320,000, this would be like, it's possible right out of MBA school, but it would be like you're working at a hedge fund or something. This would be 2 standard deviations, right? Same thing on the bottom side. Although this would not be a normal distribution, because a normal distribution is, I think it's more evenly distributed. So my example of 160 to 240 to 320, it would be viable actually. So yeah, actually it would be viable, because 1 standard deviation to the left, basically instead of making $160,000 upon graduation, you make $80,000, which is okay money, but not for an MBA from Wharton, from University of Pennsylvania Wharton School. 2 standard deviations would be 0. I was thinking about how can you make 0? I know how you can make 0. You don't get a job. So it actually is possible. It would be really unusual to not have a job. But, then again, these degrees are becoming very inflated. A lot of these people are underemployed, right? So it is possible to make $40,000 a year, even if you're a Wharton MBA. It's possible. I don't know, right? That's why I trade options. I don't have to worry about the marketplace or the job market. I could care less. Everyone could get laid off. I mean, I would feel bad for others, but I certainly would not be affected whatsoever. My option income would not at all depend on anything that depends on the job market, really. And I know you're thinking to yourself, the stock market moves based on the job market. That's true, but these companies, believe me, they're going to make money regardless. Believe me. All right. So when it comes to the Bollinger Band, I'm giving you like a longer explanation of Bollinger Band so you really understand what it means. Okay. So the top of the Bollinger Band means, now you have 2 examples. You have a son that's 6'4", or you're making $320,000 out of MBA school. Not that likely. So you see why if I were to be selling options on Tesla, I would pick the top end. If I were to do covered calls or a call credit spread, I would choose 267. By the way, guys, optionsfi.com is a website, and my friend built it. I worked with him, and I told him my thought process and logic to how the software should recommend plays for call credit spreads and put credit spreads. So if you have a small portfolio or you just want more ideas, go ahead and check it out. Optionsfi.com. I haven't really talked about it much or anything like that. It's just a side project that I worked on helping my friend out. So go ahead and check it out. I'm just telling you because Bollinger Band is one of the factors that optionsfi.com uses. And it's because of me. I've contributed to the software. I gave a lot of my ideas to my friend so he can, we're good friends. So I want to help him out. So look, when you look at the bottom of the Bollinger 220, I would essentially sell puts around 220. All right. So if I was selling put options, I would go for 220. So this is one of the technical indicators, Bollinger Band, which hands down I look at as my number 1 indicator that I've been covering since the beginning of this channel. I covered it for a long time because I believe in it the most. This is my most researched indicator. All right. I've researched it a lot and I have a degree in it. So, all right, let's continue on with other technical analysis indicators. I do look at RSI. RSI helps me a lot because RSI gives me a good understanding if the stock is overbought or oversold. It helps you identify entry points for selling puts and existing positions. Now, also, just in general, taking a break from technical analysis, when I use the momentum wheel strategy on various stocks, rather than concentrating on a single stock, okay, this reduces the risk and enhances potential income when you focus on multiple stocks. All right. When you use the Bollinger Band and you use the strategy on multiple stocks like Magnificent 7, and I'm going to cover different stocks here, not just Mag 7, because Mag 7 is pretty obvious. I'm going to cover different sectors, different stocks here in just a moment, but you want to use the strategy on multiple stocks. This doesn't change anything that I still recommend 10 to 15 stocks in your portfolio. I actually took a risk management class in college. It was like Finance 305 or something. It's been years, but what really stood out to me was at 12 positions, your portfolio is diversified enough. All right. What that means is if you have 1 stock, you have crazy volatility. Now, 2 stocks, you automatically drop down a little bit, all right? You drop down in volatility. 3 stocks, you drop down more, and it's like a curve, and it goes like this, and then you get diminishing returns, just like most things in life and most economic principles, you get diminishing returns, all right? So if you start adding more stocks beyond 12, there's some benefit to get to 15, there's some benefit to get to 20, but there's very little benefit beyond 20. And the benefit from 12 to 20, in my opinion, doesn't justify the extra work required to have 20 stocks and research 20 stocks, because what I do in Discord, why people join, is because I'm looking at the same basket of, I do 20 stocks, but I prefer to trade 12. I have the same basket of stocks. I know them very well. I know how they feel. I know everything about them, right? So when I see that they're detracting, I know, boom, I got to sell a put option to get in, like Palantir, like NVIDIA. I follow it very closely. So people join the Discord for coaching, for understanding what I do, and honestly, just for copying trades. Nothing wrong with that. Nothing wrong with that. I'm here to help you, in any way that I can. So look, when it comes to picking the stocks, this is really important. So You want to have Mag 7 because of implied volatility. The momentum wheel strategy will really generate a lot of income, a lot of steady income, a lot of passive income when you do it on tech companies because they have higher implied volatility. IV is your friend, guys. Okay, a lot of people get worried. Oh my goodness, volatility. Oh, be careful. Oh my goodness, what should I do? Oh, relax, take it easy, relax. Because volatility is your friend. I asked a trader on Wall Street when I was working with him. This shocked me, right? I was 19 years old. I was working at a company called Group 1 Trading. All right, Group 1 Trading. They have a base in Chicago. It was in New York. Okay, we got me by the bull. I got more pictures of me here. All right, guys, I pulled up my Google Photos real quick. All right, I pulled up my Google Photos. Some things I might have to blur here. Okay, this is years ago, but you can see February 23rd, 2017. All right, I'm right here in my right in front of my office. Actually, my office here on. This is Wall Street. This is 2 Wall Street. My bank, TD Bank, is the address is 2. This is me being all happy here in front of the bull. You know, you get good luck if you rub the balls of the bull. I think I rubbed the balls of the bull. Hey, I became a multi-millionaire. Decamillionaire. So I guess the bull helped me in 2017. I watched tennis. So this was Kevin Anderson from South Africa. I was watching him. Here I was at the Bloomberg office in New York City. So I worked at Wall Street for a while. All right, I had internships. I had a lot of time spent there. I had multiple experiences on Wall Street. I have like 4 jobs there. Okay, so this was the first one was Group 1 Trading. This was at the Bloomberg office. So I was going through some of the Bloomberg trainings there. It was me and several other gentlemen there. Now I also want to show you guys some stuff from Goldman Sachs. So I was at Goldman Sachs in 2016. So I was there actually before I actually took a picture of Goldman Sachs by the elevators. All right, I can't really take pictures inside, but I guess I took a picture of my keyboard for some reason. Here I was doing some financial modeling stuff. I guess this was my this is my semi-monthly pay from Goldman Sachs. So you guys asked me, oh, you have a badge, but I want proof. It's actually my pay from Goldman Sachs. This is me sitting by my computer. I'm going through my pictures, right? I never do this because like I have shirtless pics where I I go to the gym and stuff. So I'm just trying to share my screen, but I don't want, it's going to be a lot of editing for me to edit out some of my personal stuff here. But this is actually my Goldman Sachs. You see, it says compensation accounting, September 15, 2016, semi-monthly. And this was my pay, guys. This is how much I was making. To $29,616 in 2 weeks. So what is that? That's like $5,800 a month, which is like times 12. It's like $58K plus 10. Yeah, it's like $70,000 a year. So here's my tax withholdings. Here's my net pay. Yeah, so this is me like several months into my job here. I was at I guess $34,000 year to date. Wow, such a long time ago. So I also want to go through some of my older pictures here as well because this is going to be beautiful just to kind of show my journey. Here's me. Here's my XXX, my ex-girlfriend. This is so long ago. I had $42,000 at this point. Here's the old Robinhood app. That's interesting. So yeah, here's me investing. And then I started making videos on YouTube and yeah, just scaling my portfolio. Guys, look at that. That's my portfolio. This is a screenshot in 2020. Screenshot. Proof. Nobody does this on YouTube. Nobody, because they're not as legit as me. Nobody. I'm OG. I'm OG at this. Look at this. 109. What memories that is. Wow. $32,000. 41% in the past month. You guys came to the right channel. You better be subscribed. I'm the #1 option coach. 41%. I don't promise that because this high is high. I can't do that. But guys, no BS. I told you my story. You see it. 41%. 1 month. I had a crazy year. So yeah, before you knew it, 109. There was at 124, and this was in May. In a month, I skyrocketed. All right, here I guess I was eating some sushi, watching some YouTube coaching. Here I had the intelligent investor, had the strategy here of what is that? Introduction to game theory. All right, so I told you I have an economics degree, so I studied game theory and then statistics. Proof. I love it. I love showing proof, guys. I hate the people that talk. They show you Excel sheets. I made all this money. Bro, show it. Let me see it. I don't know any option YouTuber that shows like I do. No way. This is exciting because I haven't done this. This is a surprise. I wasn't planning to show all this, guys. This video is about momentum strategy, but I'm showing everything. I'm going through momentum strategy as well. And then also this book is a good one. Algorithms to Live By. This is my yeah, I was getting some sushi. Oh, I miss sushi. Oh, this is sweet potato sushi. All right. So yeah, I was just scaling my portfolio, scaling up, had 20,000 subscribers. Let's take a look at my positions back in the day. 300K in August. Jeez. God bless me with money. Thank goodness. This was awesome. This is amazing. Tesla. I told you I made money on Tesla. I told you I made money. I told you I made a lot of money on Tesla. Tesla was a secret sauce. Tesla was a secret sauce. Tesla made me tons of money. Tons of money. Tesla was a secret sauce. What else I got here? Tesla. Google, American Airlines. I've been trading American Airlines since 2020, guys. Since 2020. It's still at $12. This is the easiest money ever. This is easy money. This is what I do in my Discord. It's easy money. It's still at 12. I'm still selling options. I'm still running the covered call, the wheel in the selling puts on American Airlines, guys. This is from my Google. August 28, 2020. I put investing here, so thankfully none of my personal stuff is really coming up that much. 2020, I've been doing American Airlines. Jeez, this is 4 years of the same thing. Sell puts, sell covered calls, wheel. I've been wheeling for 4 years. I got no words. What else I got? I got Facebook, Bank of America, JP Morgan, etc., etc. See what else we got here. What else we got here? All right, we got I'm telling you, in 2020, I went from 100K to 700. 100K. Holy moly. I'm excited because I know my story. I tell my story, but I don't actively think about my story, guys. The holy moly, I told you oh my goodness. It's kind of crazy because I haven't looked at this myself for a long time. I've been on YouTube I made 600 videos on option trading, and goodness, 100K on a 500K. I see this on my students, but sometimes I forget that I was doing it myself at one point. I was doing this myself at one point, guys. I also came up from $2,000. Facts, proof. It actually shocks me because I say it a lot. I don't revisit my old days. I forgot what it's like to struggle. Guys, I struggled hard. It was not fun living at home with my parents at all. I went to my friends' houses a lot. We didn't have much money. We didn't have air conditioning. We didn't have heater. This is life changing. This is literally life changing. My life went from 100K in 2020 to 700K. And I've said that on the channel. Take a look. See it? It's possible for you too. It has happened countless times in my Discord. Countless. We have testimonials. Tons of testimonials. Tons and tons and tons and tons. And for every 100 testimonials, we have one bad one. Yeah, I'm not perfect. I've had some situations in my life where I couldn't give everyone the perfect attention. But now I'm in growth mode, guys. I'm in growth mode. We're scaling at $4 million. I have another portfolio I'm scaling also very fast. I do that in my boot camp, my 6-week boot camp. I cover that second portfolio. I cover margin trading. I cover more riskier topics that I'm not going to cover on YouTube because they're a little too advanced, but woo, crazy. 556K, 100K, 23%. Guys, it's possible if you're a doctor, if you're a dentist, if you're a medical professional, you're a business professional, if you have money, you have 5 figures, 6 figures, you know this is possible. December 2020. Ah, man. Oh, man. Oh, man. Oh, man. I think I'm done. I'm retired. Guys, proof's in the pudding. I figured for transparency purposes, I'm going to open up my Google Photos and look at my past of my screenshots, my life. I wanted to go into the proof. And yeah, I hope you appreciate that because it's actually not easy. I don't really enjoy sharing my life all that much on social media. I got used to it now, but I was really shy when I started this journey. I thought I got to share. I got to share my wins. God wants me to share. I literally had that conversation with myself, with God. I was like, God wants me to share this. I have to. It's my duty to. So, all right. It's honestly, it's a little bit emotional because I got no words to say. I've been so blessed with figuring out how to trade options, with the strategies, with figuring out that this is my life's calling and the coaching aspect of it. Oh boy, it gives me chills. It gives me chills because I know that you guys are going to do this too. I know that you're going to do this as well. That this is your path too. If you're watching my videos, you're subscribed, this is your path. This is why the channel is made. So, yeah, it's some really deep stuff. It's some really deep stuff, and I'm wasting time on this video, and I know it's killing my retention of this video, and people are hopping off, and YouTube's gonna hurt me for this, but nah, it's chilling. It's chilling to see those results. It's actually chilling. Can you imagine in your shoes when you have hundreds of thousands of dollars of gains? Like, how would that change your life? Like, are you gonna work less? Are you gonna have more freedom? It's a big deal. It is a big deal. If I didn't have this, I'd be in America. I'd be working on Wall Street. I do not want to work there. I do not want to work on Wall Street. Please, like, I do not want to be in an office. I do not want to have a boss. Like, my good friend was a doctor, all right? And we have a lot of doctor students. His life was really difficult. Doctors make a lot of money. It's not easy coming to work every day. It's not, like, I'm not a morning person. I do not want to come to work. So it's chill. These results are actually chilling. Like, they shock me because I forget that I went through this. This was a journey. So if you're on this journey, you got someone that's been through it. I've been through every day of it. The good, the bad, COVID. It's like my life story, basically. So, all right, let's go. Let's just continue here. Consider rotating between sectors to take advantage of different market conditions, allowing for smoother income generation. That's why you want to rotate through sectors. Right now, you need to be in utilities, guys, because their interest rate cuts. I'm bullish on utilities. Utilities have stable cash flow. So utilities typically provide consistent and predictable cash flow, which becomes more attractive when bond yields decline. Okay, so utilities are very good cash flow. Trying to get through the video without the chills. Dividend appeal. Lower interest rates make utility dividends more attractive relative to fixed income investments. Investors often seek the high yields. So utilities are very good because more investors, when there's fear in the market and interest rate cuts, they look for yield. Investors are always looking for yield. That's a common Goldman Sachs theme. When I was working at Goldman Sachs, it's a common theme. All higher net worth clients are looking for income. Okay, my six-figure students, income. Seven-figure students, income. Five-figure students, still income. So we're all looking for that yield. So also, I want to point out that infrastructure investments, lower borrowing costs, all of this is going to help, catapult utilities, etc. Into making more money. Also, guys, take a look at financials. I worked obviously at some of the banks. I've actually worked at PNC Bank as well. I feel like I've done a lot in my life. I've done a lot. I've worked at many banks, hedge funds. A lot of them were internships, 3 months, 6 months. But guys, I learned everything I needed to. To get to $10 million. Investing, coaching, trading. I learned it all. So I don't need it. I never needed to spend too much time at these places, right? I always got my info and I bounced. I left because I never wanted to be an employee. I did it to learn. So I could do it for myself. I wanted to be an entrepreneur. I wanted to be a trader. So it's important. You got to learn, soak up this knowledge, go through the journey like me. Look, financials, all right? Financials are good to have in your portfolio. JP Morgan, Bank of America. These are solid companies because of loan growth, okay? Loan growth. While lowering rates can compress margins on existing loans, they also encourage borrowing and loan growth, which can benefit banks in the long run. Also, increased M&A activity. Lower rates can stimulate mergers and acquisitions, driving activity for investment banks and related services. So in all aspects, I'm bullish on financials, specifically JP Morgan and Bank of America. You should be selling options on those and running the momentum wheel strategy on them because if they go down, you get in. I can tell you for one thing for certain, and listen, the momentum wheel strategy is powerful because you get into a more volatile stock, you get placed, and then it's more volatile for a reason because it's a good high momentum company that's going up. Like, I'm sharing my screen. You can see that Tesla's high momentum. So if you catch it here and in the past 6 months, it's up. Listen, this is going to be freaking crazy. You're going to say, Henry just simplified my life like no other. Okay, this is the most value-packed video I have. When I was working on Wall Street, basically I asked a quant, okay, this guy had a 4.0 GPA that went to my college, 4.0. I asked him, listen, Michael, okay, his name was Michael. Listen, Michael, how do I predict the momentum? I see that the valuation model that you have, we have 48 factors here on the model. 48 factors were all kinds of factors. Statistical factors, earnings factors, momentum. Momentum was the most important factor. I said, listen, how you do momentum? He's like, I'm gonna blow your mind right now. I said, I was like a kid in a candy store. I was like, wow, he's gonna give me the proof, secret sauce. I was ready. I had my notes. I'm like, it's gonna be some very technical stuff. I hope I can grasp this. He said, listen, if the stock is up over the last 6 months, the more it's up, the stronger the momentum. I'm like, okay, noted. Step number 2. He's like, that's it. I'm like, I'm getting a finance degree. I heard there's many other factors. This one factor, he said, accounts for 90% of the results. I said, so what's the point of the other factors? He's like, they help a little bit. You kidding me? I was confused. I was shocked. I was confused. I was shocked. It's like, Michael has a 4.0 GPA. Guy's managing 7 billion with a B, not with an M, with a B, 7 billion. And the man told me that the most important factor is momentum. And then you look at the 6-month chart, and if it's up, the more it's up, the better. I took that note, I put it by my bed, and I made a lot of money with it. And now I want you to make a lot of money with it, because look at Tesla. It's up from 175 to 267. It's up almost $100 in 6 months. You heard what Michael said. And I've been using this simple strategy. And making money doesn't have to be complicated. That's what makes me the best, is I don't complicate things. I'm not overthinking nothing. When it comes to trading, high momentum is the key factor for running the wheel strategy. Positive momentum on a high quality company is the key to making money with the momentum wheel strategy, which worked for me so well. It worked for me super well. So you got to do it. You got to do it. Just run this on Mag 7. Run this on some of the financials, especially right now. Run this on the utility companies. This is a no-brainer. The cost of capital is getting lower, so companies are going to borrow more money. Tech is going to go up. We're in a bull market, and you got to run the momentum wheel strategy. This is what I'm literally going to only focus on during my Monday and Wednesday coaching calls in Discord. That's all I'm going to do, because it works. Why would I get pretty? Why would I get cute? I don't need to. All right. Also, pay attention to materials. You might not even know what materials is. Materials is a sector in it of itself. Okay. Listen, I'll tell you the stocks in just a moment. But look, why is materials as a sector going to do well? Lower rates can stimulate economic activity, leading to increased demand for construction materials in related industries. All right. That means there's going to be more building. And also, I'm sorry for all the folks in Florida. Okay. I have an office in Florida. I'm not in Florida. I have an office in Miami. I have friends in Tampa. So it is hard to see the hurricanes that are coming in. So I'll pray for you guys. That's tough. But the toughness aside and all that aside, right? It is going to be expensive, and that money is going to prop up the stock market's material companies, because we got to rebuild, right? I think in Hurricane Katrina, when that happened, the cost to the United States was $120 billion. I think America paid $120 billion to fix everything, but it was $145 billion. Okay. Now, it's not because of the hurricanes per se, but I do think that materials is a strong industry to be in. Okay. Look, commodity prices, lower interest rates, they're going to be benefiting commodity prices. Okay. So it's going to be a benefit to the materials sector, because they obviously have a cost. There's cost. Time is money. Materials is money. Everything's money, guys. This whole world's money. It's a value exchange. So material companies will have lower cost because the commodities will get cheaper. Listen, I mentioned construction projects. Cheaper financing for infrastructure projects can boost demand for materials, benefiting companies involved in mining and chemicals and construction supplies. Now, I mentioned stocks. Dow is a major chemical company that produces a wide range of materials and chemicals used in various industries, including packaging, electronics, and construction. The company is known for its innovative products offering and commitment to sustainability, and Dow is popular amongst investors due to its strong market presence. So this is a stock that I would be running the momentum wheel strategy on. Let me show you a play on this right now. I'm going to show you how I would play Dow. Okay. Dow actually hires a lot of people from my college because it's fairly close. The headquarters is close. It's in New Jersey, I think, right? No, the headquarters is in Michigan, but they have a huge office in New Jersey. Very old company. Listen, this is actually a very good stock because it's at $53 per share. It has stable returns. Listen, I've said this. I'm going to say it again. I like stability. I like consistent passive cash flow here. Dow at $53 with a 5.9% return. If you want retirement income, run the momentum wheel strategy on Dow. Although it's not as sexy as the Mag 7, this is strong because of the predictability. I showed you American Airlines. Predictability. I like predictability. I'm not about maybe results. I'm about making it happen. Dow makes it happen. They've been around since 1897. How I do momentum wheel strategy, I go higher on the delta. All right. I go more aggressive. This is very important because when you have high volatility and positive momentum, we're not going to get a pullback. Okay. We're not going to get a pullback that's going to be significant. Therefore, we want to get assigned. Okay. So you want to go for a 37-day option, November 15. I would go 52.5. This is going to be higher delta. 0.4 delta, essentially 40 delta. I like it. We need to go higher delta to capture more premium and to get assigned more aggressively. You want to get into the company easier and faster. Okay. It's going to be much better. It's going to be a lot better to get assigned. And then you have that upside. Now you're in the stock. Now you can sell covered calls above your average cost. So if let's go for, let's say January 17, sell call. If I go for 55, your average cost is 52.5. Why wouldn't you go for 55? You get $2.5 upside and more income. Now, Dow specifically doesn't have the highest implied volatility. It's at 20. It's very low, actually. So this is a solid play just for the retirement income. I'm going to give you some more plays in just a moment. Solid. The next stock I have on my list here in my notes is going to be Newmont Corporation, which is a ticker symbol NEM. All right. So this is another materials company. Again, I said that I like materials for many reasons. Okay. Same price point. So you guys with the bigger portfolios, multiple 5 figures, 6 figures, you should have materials in your portfolio. Gives you more diversification. All right. Very important. Now, Newmont is one of the world's largest gold mining companies with operations spanning from North America, South America, Australia, and Africa. The company focuses on gold production, but it also mines copper and silver. These precious metals, guys, they do make money. I don't personally love them, but I like the company that makes money off of them. Great. Newmont is popular amongst investors as hedge funds. Basically everyone, pension funds, investors, they all hedge against inflation and economic uncertainty with gold, often viewed as the safe haven asset. Its strong production capabilities and track record of returning value to shareholders enhance its appeal. All right. A lot of investors like it. As we wrap up here, I want to remind you that the momentum wheel strategy is not just another trading method. It's my innovative approach to designing your own way to generate consistent income while managing risk. So with that being said, I'm going to go into the trading portion and I'm going to show you multiple different plays and multiple different stocks and how I would think about running momentum wheel strategy. So first of all, I want to point out that these are my stock holdings. Okay. I have Apple, I have Walmart, I have PayPal, I have Palantir and Target, Amazon, American Airlines, Snap, and Google. I recently got into Square, Chipotle, Starbucks, and Adobe. It's because I work with many engineers, so I get to see some of the insights into Mag 7 stocks as well as, something like an Adobe. So, with that being said, let's go into Chipotle. Chipotle is also at that price point where I think it's bellissimo, beautiful. All right. Crasiva, bonita. Okay. We're going to use multiple languages here. All right. All the languages I kind of know. Lived in Colombia for some time. I know some Spanish. Not the best at it, but I know Spanish. I know Russian, English. Chipotle right here. Fantastic company. All around fantastic. I have 1,100 shares. I'm up a little bit of money. Guys, just because I'm up a little bit of money doesn't mean anything. Okay. I'm up a lot of money. People get excited. I'm up a little bit of money. People don't get excited. No, thinking about it the wrong way. You should get very excited because this means that I'm early into this opportunity. It hasn't made money yet, just like with Palantir. I was showing it at $16. Henry's crazy. I'm up 100K on Palantir. Where are those people now? Where are the people hating? I don't know where they're at. Same thing with Chipotle. I'm very confident. I'm bullish. I'm confident. And it hasn't made that much money yet. You know what that means? We're about to get a bull run on Chipotle. I think that Chipotle is going to be money. I think it's going to be swimming in money. I don't think the stock's going to be $100 by no means, but they're expanding expanding their stores. The brand, the new CEO, I think fast casual trend in America will continue to increase. People don't have time. People are not cooking. People are obese. Chipotle offers a solution for all of those. Chipotle is a bit on the healthier side. They have great ingredients. They have good management. They have good pricing. They're fast casual, which is, Kava and the rest of the restaurant industries that are fast casual are performing very well because they come into big cities where there's a lot of office workers, and the office workers have that quick, 30-minute break or whatever. Gotta get that food. They come down and, they order consistently at Chipotle. It's a very big lunch spot, right? They have a huge boom in traffic. I think they have pricing power, guys. They have pricing power. Very important. Pricing power. Okay. When you're good at what you do, you can price well. That's why personally my coaching is not cheap. It can be several thousands of dollars because I'm the best at what I do. My Discord it's not free. It's an investment, and I take the same approach in my personal life as these best companies do. I learn from the best. Chipotle, they're making money hand over fist. They can increase prices because they have a good product. When you have a good product, charge good money for it because you have a good product. You have a good service, right? Chipotle, I'm very bullish on the momentum wheel strategy. I think that go for 55 puts as you see on my screen right now. I got 55 sell puts, 10.18, 11.15. Listen, you can go for January. I'm gonna show you a trade right now on January. Look, I'm running the momentum wheel strategy because I have shares and I'm doing covered calls, generating income. I'm selling puts, I'm generating income. This is prime example of momentum wheel. I'm aggressively selling puts. No 30 delta, aggressive, high. Okay, so let's go for January 17, 2025. Go for 57. I'm not afraid if the market it's going to be open in an hour. I'm going to do this right here. I'm going to do this right now in an hour when the market opens. I'm going to go for 10 contracts here. 57, no problem. This is going to be a delta of 0.4. Sign me up. This is how the momentum wheel strategy works. You find opportunities, you sell aggressive puts, you put your money right there strong. And then you hold. Don't get afraid. Don't think about, I'm going to close this position. No. You're a busy professional. You're an entrepreneur. You're a 9-to-5 worker. Your time is valuable regardless. You don't have time to worry. You have time to just make money. Sell the 57 put, hold. Don't even look at it. Just hold. High quality companies you don't need to worry about, all right? Don't need to worry. All right, that's one example. American Airlines. I showed you, I sold 12 puts, 2020. It's still at 12. What do you think? My average cost is 1064. What do you think? You think it's going to be profitable in the next 3 months? How about the next 6 months? Is the company good? Company's all right. Can they go bankrupt? No, because they're essential to the economy. What do you think is going to happen? I got no words. You know what's going to happen. Sell puts, run high delta momentum wheel strategy. Use Henry's momentum wheel strategy on American Airlines. Take the strategy and use it to sell, for example, 11.5 puts. Aggressive. Listen, take your sheep clothing off. You're a lion now, all right? You're a lion. You're going to make $10,000 a month. You're a lion. You want $10,000 a month, you got to go properly with the high momentum wheel strategy. Now listen, I've been focusing on safe passive income for a long time. I go for 30 delta, but today's video is about squeezing out a little bit more money because we want more money. We want to squeeze more cash out of the market. We deserve it. We deserve it, guys. We deserve money. We've been practicing options. You've been watching this channel. Watch more videos. Discord's not for you if it's day one for you. Watch my videos. I have courses. I have free courses for you to check out. I have a covered call course I recently made. Watch my tutorials. But if you've been with me even a week, you know how to make money. And with the momentum wheel strategy, you can make a lot more of it. Now listen, they don't have the 11.5 strike, which is kind of weird. Let me go to February here. That's kind of weird. They only have the 11 strike. Let me go to March. It's weird because if you go to the shorter term expirations, if you go to November 1st, you see that 11.5. So let me see where we can go. I think we can go for November 22nd. Yeah, we can have 11.5. So, okay, this is good. Do the 11.5. This is out. 6% return. 6%. That's money. Easy money. 6%. We got to celebrate this. This is easy money. So 6% is fantastic. On next strike, I would go. Yeah, go for January. Feel free to go for 11. The 11 here is still a good return. It's 30 delta. It's a little bit less. I don't know if it qualifies for the momentum wheel strategy, but thereabouts. The momentum wheel strategy will probably be closer to that 40 delta, that sweet spot 40. This is a little bit lower in the 30. So now let me go to another play. I'm going to give you one more play here, and then we'll wrap up the momentum wheel strategy that Uncle Henry created to make you more money, get you richer. Honestly, Tesla's a great one. Tesla's great. Look at the bottom of the Bollinger Band. It's 220, but the average is 234. That's the middle of the Bollinger Band. I'll go for 234. No problemo. Easy. Lico. Без проблем means in Russian, easy, no problem. January 17, 2025, sell put. Go for 235. Wow. $2,200 in premium, 10% return. 100 days, it's 1% every 10 days. I like that number, you know, I'm not into numerology, but listen, 10%, 100 days, life's good. Life's good. 100 days, you make 10%. This is premium collected, by the way. There's still some management you got to do, but with the momentum wheel strategy, we're looking to get assigned. So there's really no management. You really can't lose if you want Tesla anyway. So, this is the Superman. This is the superpower strategy that, to be honest, I think it deserves 30-40% of your portfolio. When I was growing my wealth consistently, quickly, this was a core holding. I had to go higher delta. You have to. You want to make more money, you got to go with the momentum wheel strategy, because you're going for that higher delta. You need momentum. You need swings. You need it. Otherwise, you're going to make good money. Don't get me wrong. I have a student. I mentioned him many times on the channel. Danny. He makes $6,000-$6,500 a month on 300K. He's happy because he owns his house. He doesn't have much expenses. So $6,000 on 300,000 is good. He's happy. He's good. He's cranking that out literally 12 months out of the year. Literally every single month, because the lower return you go, the easier it is to make, obviously, right? It's easy, right? When you guys want 10% returns in 100 days, I take a little bit more risk and be smart with that risk. So the momentum wheel strategy will allow you to basically make a higher return because of higher delta, which is higher risk, but I don't really consider it higher risk if it's a high quality company that has the Michael secret, which I was mentioning, the guy I used to work with back in, this was probably 2018 or so. So there you have it, guys. My full momentum wheel strategy that I want you to take advantage of. If you want hands-on coaching with me, you can visit the first link in the description. I will be more than happy to coach you hands-on through either a boot camp, my one-on-one coaching, which is not cheap. My time is very limited. I love what I do, but I'm only one person. My time is limited. But you can be part of my group calls in my Discord. I share all my trades, momentum wheel strategy that I run all the time, which has scaled my portfolio to $3.5 million. So happy working with you guys. I hope that you subscribe, and I hope this video was very valuable. Part of the video was very emotional for me. I shared you guys the real truth of the feelings I've had, the journey, the facts, everything. So hope that you guys appreciate it. Thank you so much. Hope that you invest safe. I hope that you go along with a similar journey as me, grow your wealth. I'll be here every step of the way to support you, to pray for you. And I'm really excited to have you as a subscriber of this channel. See you in the next one.